Welcome to the Prophecy Club. Today we're going to be talking about gold and silver and especially tariffs. We have Jonathan Rose with us today. Who's Jonathan Rose? Well, 30 years in the precious metals business, owned his own company for 20 years, which is a Christian faith-based company. And I have at least one example that I'm not going to get into about how this guy has taken care of people above and beyond the call of duty. Anyway, Jonathan Rose, welcome back to the Prophecy Club.
Hello, sir. Pleasure to be here, as always.
Okay, so the big issue, and I would have to say, because the border used to be the big issue, but, it's kind of solved. Okay, so the thing that has become the biggest issue is tariffs. I personally don't think that we're going to kiss make up with China anytime soon. I think that the prophecies say we're looking at several months, maybe much, much longer of supply chain, not just food, but all kinds of things, parts for the cars, lots of problems. Okay, now the question is, gold and silver expert here.
Yeah.
Comments. Real broad question. Tariffs, gold and silver. Say on, my brother.
What's going on? Well, pleasure to have me back on the show. I appreciate that first and foremost. And if people are tuning in and they haven't seen us have conversations before, I grew up in London. I worked for Merrill Lynch, Morgan Stanley, the London Metal Exchange. I've been in finance my whole career, advised big banks on gold depositories, even in Southeast Asia. I've been there, seen it, worked with the best in the industry. And one thing I've learned over the years, there's different ways to own metals, the safest ways to physically hold on to it, which I'm sure we'll get into. But a lot of people are asking me right now, absolutely right, tariffs, gold, what's going on? And obviously these tariff wars, as I refer to them, are very, we're in a very trepidatious time for the economy. We've seen some wild swings. Obviously, we've seen the stock market go down 1,000, people, pulling their hairs out, and then all of a sudden it goes back up 1,000. They're like, yay, everything's fine. Then the next day it goes back down. We're seeing this big volatility swing, and this is all because of two steps forwards, one step backwards. So as President Trump is really addressing the nation in terms of short-term pain for long-term gain, he's already set the pieces in the chessboard. And I think he knows the long-term results here, but it's a very dangerous game that we're currently playing when it comes to trade wars, because a lot of European nations and other countries out there want to come to the table and make that unfair balance where the US is paying out all this money, these unfair scales of balance, and they're kind of recalibrating them. And obviously, one of our biggest trade partners that refuses to do so, as we know, is China. And that's causing all types of problems in the stock market and trickling it down, in fact, into the agriculture side of the economy, which we'll actually touch on a little bit, because I think agriculture isn't being talked about enough, because that's a powder keg getting ready to blow up. So, obviously with the trade wars that are happening, a lot of car manufacturers, a lot of retail people who own businesses, they're struggling or they're going out of business. In fact, the community that I live in, I speak to my neighbors, they know I'm in gold, and they say, wow, I should have been invested in gold when you told me to. My business is terrible because I'm importing products from China. And if this carries on like this, we'll have to shut our doors and close down. And I'm hearing this more and more. And the question is how long is this trade war going to continue?
Yes, that was my question.
Right?
Are we about to get over this thing with China?
I don't think so. I think this is going to drag its feet. I don't think there's going to be a quick fix here. China have dug their heels in, and they already started retaliating the US in certain ways by selling bonds, and bonds are basically a debt that's tied to the US dollar. So I think the trade wars are far from over. And I think there's a rubber band, right? And if you stretch a rubber band, it can go pretty far. At some point in time, that rubber band can snap. That would be the worst thing that could ever happen for the US dollar. And the rubber band right now is pretty far. We don't have that much more to go. And in terms
dumping $2 billion worth of US bonds, which is basically our debt, and the experts say that can cause the dollar to go down a lot. Your comment.
Yeah, so there's a gentleman by the name of Jim Rickards. I'm not sure if you've ever heard of him before. He's written a couple of great books. He did his famous book was Trade Wars, and it kind of talks about this, about how you can destroy a nation from within through currency devaluation, through trade wars, and we're kind of seeing this right now. So I think that we're going to continue to experience pain. And in fact, this week we've got big tech earnings about to come out. We're having inflationary data that's going to come out. And again, the time this airs, the market could be down another 1,000 points. That's just the reality of how fragile this economy is right now. So in terms of trade and tariff wars, expect this to be on people's lips for, I think, the next few months. I don't think it's going away overnight.
Right.
I talked about very quickly agriculture, because it's not being talked about, but the agriculture industry is in all types of mess. We're going to see this now because retail shops, the shelves.
Explain that. What is? I read an article on that this morning. Explain what is the problem with agriculture.
Yeah, I think this is not really, hasn't become mainstream news, but it will be. But a lot of our agriculture is exported to what country? China. So
Right.
a lot of our big orders are going overseas. It could be soybeans, it could be water, believe it or not. It could be many different agriculture products that are being shipped overseas. All of these
you sell to China, they're not buying anymore.
They're not buying. They're like, we're not buying. So now it's piling up here in the US. These products can't get moved. They're being ruined. They're being spoiled. And eventually these agricultural businesses, which are the backbone of the US economy, they're going broke and they're going under. Once Wall Street kind of sees the aftermath of the agriculture industry going broke, the stock market's going to take another hefty tank. It's going to take another whack.
Hopefully a lot of other nations can jump in and start buying a lot of the things that China was buying in the ideal, but maybe it won't happen.
Well, you bring up a good point, and other countries' consumptions of US consumer goods isn't as great as China's. But what China have done is indirectly threatened other nations and have said that if these other nations come to the table, renegotiate with the US, and the US does a deal with these foreign nations and it affects Beijing's pocketbook, then China is going to reciprocate tariffs on these foreign nations. So you've got China that doesn't want to solve a problem. You now have China that's threatening other nations that if you do business with the US, you're going to get penalized. So it's really it's like a volcanic eruption that's about to happen with the US dollar. Okay. And that's why dollars are being dumped every day.
Let me throw a total curve in here. I just made a program and I brought up a couple of points because I have two different prophecies that says that, like, for example, one of them said the underground church is about to see above ground results, and that he prophesied what he saw was that there's about to be like an internal revolution and Xi Jinping is going to be replaced. And the reason I believe that is because Dmitry Duduman was told, quote, God will raise up China, Japan, and many of the nations. They'll go against the Russians and defeat the Russians. So by the time Russia attacks us, which I don't think is within a year or two, I think it's more like 3 or 4 years away. That's just a guess. My point is, apparently there is a regime change. And this guy Chang, the China expert, he wrote a whole book on it. He's saying that there's an internal revolution heading to China and Xi Jinping is on his way out. Now, if that's true, then all of these tariffs could be a very, very good thing to force regime change in China. But we don't know that.
Yeah, either we don't. That's TBD, right? To be determined. But one thing's for sure, the tariffs, Trump ran his presidency, and one of his campaign strengths was on leveling the field for global trade. He ran on that policy. So it shouldn't be a shock to people that he's implementing this play. But implementing this play has caused people's heads to spin, right? But we need to implement this. For what reason? He's doing it so not just to level the playing field, but to cut down the US debt. We're $36 trillion in debt. We're going broke. The US dollar is about to go bankrupt.
Right.
And when it does, you better make sure you have something. Obviously, I talk about gold and silver, but this is my whole point with owning physical assets, that you need to own something now that's going to back up your dollars for when this rigged system is finally, going to break down in its entirety. So we do need these tariffs.
Let's say that the things that have been prophesied finally arrive. I'm talking about food shortages, basically credit cards not working, the grocery stores are basically closed. Why would that be a good time to have gold or silver?
I mean, yeah, good question. So when you look at currencies and they devalue, you don't want your portfolio to go down to zero. You've worked hard your whole life, right? And it's tied to the stock market, and you retire, that's your nest egg. When you look at what's happening in the economy, the simple question is what do you have in your portfolio that's going to protect you from this volatility, this decline of the US dollar, the faith in the US dollar, the tariff wars, the higher inflation, which is coming, the global instability, whether it's domestically or overseas, what's happening in the Middle East, all this global uncertainty, economic uncertainty means you need insurance. And essentially what gold and assets like silver are insurance. Just like you have insurance for your health, you want to have insurance for your US dollar assets, which are in 401ks and IRAs, or just sitting cash in the bank. I mean, look what happened this morning. We had another bank that had another outage. People couldn't use credit cards. People can't access their money. So with these big banks that can pull the plug on us at any single time, control us through the money system, you've got to kind of break free of this matrix, the financial shackles, as I call it, and have something tangible that's going to hedge you against everything and more that we're witnessing right now. And Stan, that is assets like gold and silver.
Now, my understanding is that gold just hit $3,500 an ounce or in that ballpark. My first question is, what caused that? If we can understand what caused that, then maybe we can understand what might cause it to go up or down too.
Yeah, great question. And for me, an easy question to answer, because the market instability is driving up the price of gold. So what's the main kind of market instability that we're facing right now? Pressure to settle these trade and tariff wars. And during trade and tariff wars, what we're witnessing right now is something you said, is that China is dumping our US treasuries and US bonds, okay? And if you're not too sure what bonds and treasuries are, simply put, is their debt instruments, where we're issuing debt to other countries, where they're investing in the US, and we're promising to pay them back, just like a loan with interest. And but they give us
them, that makes the dollar weaker, correct?
It does make the dollar weaker.
Okay. So which is the time to have gold and silver.
Because there's an inverse relationship. As the dollar goes down, gold goes up. Right. So again, it's like a punch list right now. We've got a weaker dollar because people are selling debt back, okay? You've got higher inflation because consumer goods are becoming more expensive due to the tariffs and these export and import taxes that we're witnessing. And then obviously we're seeing global instability, and we are yet to see what else is going to come. But obviously we have the US trade deficit very high. We've got credit cards, auto loans defaulting. We don't have a crystal ball, but we have a good roadmap, and we know what that roadmap looks like. Today, Stan, we have more problems on our economic plate than we would like to see. And because our plate is full of problems, you want to make sure that you're going to have something that's going to offset those problems. That's what the yellow metal does. It offsets problems, and you can put it in an IRA or 401k, and that's where the smart money is going currently.
You get this question all the time: gold or silver? Which one should I buy, or both, or how? What do you?
I like both. Okay, I'm probably a little bit more favorable to silver right now because silver's very undervalued. People would like to see silver go a little bit higher, quicker, and it will. Patience is a virtue. So you've got to have a little bit of patience with the silver market, but it will get there because the industrial supply and demand is just absolutely outrageous. Demand super strong for silver, supply is very limited. If you look at gold, UBS, Goldman Sachs, they're looking at $4,000 plus next year for the price of gold. Silver,
gold, right? Not silver, yeah.
Gold, not silver. Silver price predictions are $50 to $75. I would say that's probably going to happen in 3 to 5 years. I don't have exact time, but I feel comfortable with that window. So if you haven't done so already, I would start getting an education or buying it now whilst it's still relatively cheap. I think, in the next 5 to 10 years, $8,000 to $10,000 an ounce for gold, easily going to happen. And when that happens, you want to make sure that you're part of this wealth transfer that we're witnessing, out of fiat currency into tangible assets. So there's a few ways you can participate. One is by going to Prophecy Club Gold. And when they go to Prophecy Club Gold, they can access our investor library so they can get educated on the benefits of owning gold and silver, even tax deferred, penalty free, through what we call a tax-free rollover in this little IRS loophole that people are using to protect their retirement and their nest egg with assets like gold and silver. Maybe you don't have an IRA or 401k. That's fine. Maybe you just have money sitting in the bank. It's not earning you any interest. Well, you can move that sideways. We call that a lateral trade, and put it into physical assets that you hold on to. Here's an example of a physical asset, Stan. I'm just going to put this up on your screen. This is a product that we manufacture ourselves here in America. It's called the Prepper Bar. And this Prepper Bar, you'll see some grooves on it. I call it wealth in your wallet. Oh, you have one too. Fantastic. So yeah, in God we trust on one side, made in America on the back. The top row is a 20th of an ounce. The middle row is a quarter. The bottom is like a 1/10 of an ounce. So these are breakable, usable pieces that if you're ever in a pinch, you can use this. This is 0.999 pure silver. It comes in 24 karat in gold as well. You can put these in your IRA or 401k, or if you're like me, I have my wallet here. I'm just going to give you a quick demonstration. I keep this one in my wallet. Here's the camera, and I can pull it out, and it's just like a credit card. If the credit cards go down, I need to use some portable tradable wealth that I can keep at home, stack, take with me. It's just a fantastic product. The most similar product like this out there, Stan, is made in Switzerland. It's called the Valcombi bar. And this is called the Prepper bar. The Valcombi bar, there's a big premium on those because they have to be shipped over from Switzerland. And the time they hit the consumer. Big market. Yeah. Premiums on these are very low. And this is something, that people have said to me years ago that say to me, well, Jonathan, I've got a 100-ounce bar or a 10-ounce bar of gold. I don't have a hacksaw in my back pocket. I can't cut it up into little pieces. How do I use it? How do I spend it? Well, if you're looking for something spendable, tradable, when the fiat currency goes south, then you'd want something like a Prepper bar because it's utility.
Let's say we've got, I think the largest bar is 1,000-ounce bar. Is that correct?
Yeah, a good delivery bar. You could get like a 100-ounce bar, 250-ounce bar.
Do we get a better price per ounce buying 1,000-ounce bar as opposed to 1-ounce coins?
Yeah, so you're talking about a good delivery bar. You're looking at like $1 million for a good delivery bar. So you wouldn't be able to hoist it around on you. It'd be that those types of bars stay in bank vaults and depositories. The most feasible bar to buy would be a kilo bar of gold, which would be cheaper than buying a 1-ounce gold coin. And a kilo bar today, as we speak, from the top of my head, if we were to sell one on the retail market, it would be about $111,000 for gold, for kilo. Yeah.
Okay, so, let me qualify my question. I was saying silver. In other words, do you get 1,000 ounces of silver right now would be what, $2,500? 25,000.
100 ounce. Oh, for 1,000, yeah, about 25,000, 30,000.
$25,000 for. But let's say someone's going to put, a couple of maybe $250,000 into precious metals. That might not be a bad idea for them to get a bar or two, maybe 1,000-ounce bar, maybe a couple of kilo bars, simply because don't they get more metal for their money in a bar? That's my question.
Yeah, there's definitely less of a premium on a bigger the bar. The problem is the people who want precious metals tend to want smaller denominations because they want something where if I'm buying metals, I'm using it as a hedge. I want it to serve a purpose. Some people are happy just sticking it in their IRAs and never seeing it ever again. And for those, yes, maybe you'd want a bar, a big heavy bar, right, that you're never going to carry around with you. But if you're looking at the versatility and the utility of precious metals as something spendable and tradable, then people would want smaller bars or smaller coins or smaller denomination coins. But you're right, the smaller the denomination of the coin, the higher the premium. So I always tell people that if they're going to buy coins, best to stick with something that's maybe 1 ounce of a coin, because you're going to get a better premium on it. Or if you're looking at something like this, then get a prepper bar, because the premiums are also low.
Well, a prepper bar is great because there's been many prophecies that says that the credit card system, the whole electronic grid for that matter, goes down. And at a time when, as they say, in the land of the blind, the one-eyed man is king. So in the blind, when the credit cards don't work, if you can pull out a prepper bar, you're in real good shape.
Yeah, it's better to have it and not need it than not have it at all, as they say.
Okay, so buying the bars, a kilo bar, 1,000-ounce bar, be it gold or silver, is kind of more of a novelty thing. But in terms of actual use and savings, probably stay with the 1 ounce coins, right?
Yeah, I would stay with American-made products, something from the United States Mint or made in America, because these tariffs right now, there was a time where importing a lot of silver from Mexico, they were going to start imposing premiums on metals coming over. But President Trump did a U-turn on that. So, it's always best to kind of buy what I call mint direct. It's coming straight from the US Mint. And then the quality of the metal that you're buying.
That's a good question. I was going to ask you about that, because I see
amazing.
I see some coins, whether it's gold or silver, that are not U.S. coins. Made in Australia or whatever.
And they're fine, Stan. They really are fine. But I think from supporting American businesses and American refineries and American metals, I just like to buy American minted coins. Not to say I don't have other coins from around the world, but when I'm dealing with like IRAs, you want to make sure that they're coming straight from the American mint, haven't been touched by hands. They're referred to as mint direct, and they go straight into your IRAs or shipped straight to your home in sure delivery.
Okay, I call you and I say, I've got X number of dollars to put into it. There's two questions. One is, what's the fastest return, or what's the safest place to put it? How would you answer those two questions?
The safest return in terms of sending it back?
This return, or the safest place to put it?
Yeah, safest return, like if someone was shipping metals to us?
No. I'm sorry. In other words, if I'm investing, but I want to know, I don't want to wait 20 years. What would you recommend I put it in, buying some kind of precious metals, if I want the fast return, as opposed to the second question is, what would I do if I want safety, to know that I'm going to lose?
So I would kind of reframe your mind a little bit and make you understand that if you're looking for a fast return, then gold isn't for you, because gold is security. Okay. With the economic strife that we're seeing, gold will probably double in value, in my opinion, in the next 5 years. So, there's going to be your return. But the main reason we do this isn't to make $1 million overnight. It's to preserve what we have. So that's first and foremost. Anyone that's...
I know around the turn of 1999, around Y2K, around 2000, I can remember that the price of gold was about $200 an ounce. And I remember guys saying, man, you can't get out of the ground for $200 an ounce. Well, now here we are at 2,500. Well, slap me. Boy, I wish I'd done some of that,
Yeah, 3,300. I remember being up on stage in front of a big bank, talking to over 500 people. And someone said to me, where'd you see the price going? And I said, $2,000 an ounce and higher. And then my cheeks going bright red because everyone was laughing at me. And then today we see gold at 3,322 as we do this interview together, and it's going to double from there, in my opinion, in the next 5 years. So again, I don't know what people think of as a quick return. Again, I caution people with that type of mindset, because I'm looking at preservation of wealth when it comes to metals. That's what it says on the bottle. Protect against market downturn.
Investment, right? Buy it and forget it.
Yeah, buy it. You don't wait to buy gold. You buy gold and wait. And Stan, the second question.
My understanding is gold is what you put your money into if you have a pretty good pile of it. Silver is what you put your money into it if you don't have too much. Depends on how little you have. Obviously, if it's not very much, you can't even buy gold. But I've also heard some people say get both, get a percentage. Your comment on that?
I like gold and silver. I'm hedged. My allocation is 70% silver, 30% gold. It used to be the other way a couple of years ago. But looking at the economic data that we have access to, the industrial demand for silver is at an all-time high, and it's going to continue to climb. The silver supply is limited, and supplies are dwindling. No new mines are being found.
Right.
So eventually what's going to happen is just basic economic supply and demand, when demand outstrips supply. And when that happens, that's why you have these big fund managers touting even $200, $300 an ounce for the price of silver. And eventually, in time, I'm not in a rush, but in time that will come. So I like silver.
They just call you 800-200-GOLD, prophecyclubgold.com. When they call, is there a whole bunch of tracking, or can they just call and ask a few questions and then decide if they want to pursue further and walk away, or how sticky is it, I guess?
Yeah, there's no obligation. What I do say is call in at 800-200-4653, and that way they can get some material sent to them on different types of coins and bars, which coins and bars are going to give them a stronger return in the future. Maybe they have a retirement plan of some type. Learn how you can roll that over tax-free, penalty-free into precious metals that you control and you hold on to. And anyone that mentions your name, Stan, or the Prophecy Club, when they purchase, they will also get a free prepper bar that will be sent to their house. So that way they could keep
a little closer to the camera so they can see. A little closer to the camera. There we go. Now, there you go. Yeah, okay. So that's a little bit bigger than a credit card, a little thicker, but not
a little bit than a credit card, but it fits in your wallet. This is the most common question. People call in and say, I've got this nest egg, this big pile of money. I've got to do something with it. They don't know what. They're still exploring and finding out their options. But I kind of will argue gold against many other options out there, because you physically hold on to it. And during these tumultuous times, you want to be holding on to your own wealth. Just give us a call at 800-200-GOLD. That's 800-200-4653. They could speak to our knowledgeable gold experts here. There's no obligation. We've been doing this for many, many years. And, any questions people have, we're more than happy to answer them.
Jonathan Rose, thank you for being on the Prophecy Club, my brother. Have you back again soon.